Okay.
We're hot off the weekend with Stonkcast. This is your host, Ethan, with the other host,
Brandon. Welcome back. Welcome back.
to Stonkcast. It is Sunday, February the 2nd. And let me tell you, as far as crypto is going this weekend, it ain't good. Crypto is not having a good time this weekend. I'd like to have a moment of silence, a brief moment of silence.
Respectable.
We'll get to our senior correspondent in the field, Michael Wilcox, later in this episode. But as of today, he's lost a lot. But I just wanted to thank everybody for joining us and checking us out this week. Brandon is going to let us know about some tariff updates and the market reaction. What do you got? You had a thought there. I could see it.
I was just going to say before we dive into tariffs, somebody should really check in on Michael. I haven't texted him at all this weekend, but I hope he's doing all right there in the Twin Cities, wherever that is. I'm not sure if he's living out of his car in a Walmart parking lot or what that looks like, but someone should reach out.
Yeah. When I was my richest with Dogecoin, I was also subsequently living out of my car, and I can tell you for a fact that the best place to work is a hotel or a gym because they've already have the bathroom pre-baked in. Yeah.
Yeah, that helps a lot. That helps a lot.
Get your shower on.
Yeah, get your shower on. Hygiene's important when you're living out of a car. Been there. All right, so it's been a wild weekend. As Ethan shared, we do indeed have some tariff news to get into. Before we do that, however, just a reminder, wherever you're watching us, iTunes, YouTube, Twitch, whatever the case may be, please like and subscribe, follow. Definitely helps the show, supports us, and supports Michael. So definitely want to do that. So we're going to jump in here to some tariff news. Basically over the weekend, President Trump decided to lay the hammer down in a pretty big way. And the interesting thing about this is that a lot of people expected the tariffs to kind of be like a warning. They kind of envisioned Trump using the tariffs as a way to, get other countries to get on board before actually dropping it. And Trump basically just said, you know what? No, we're going to go right into it. So straight from Barron's here, markets brace for volatility as U.S. trade war erupts. So over the weekend, President Trump on Saturday imposed a 25% tariff on Canada and Mexico and 10% on China. Canadian energy products will be tariffed at 10%. The leaders of Canada and Mexico quickly announced their own retaliation plans. While Canada and Mexico depend more on U.S. exports than the U.S. does on them, the moves could hit certain U.S. sectors and pocketbooks harder. So basically, what we're looking at here is a very interesting week ahead. The tariff news, I think a lot of people expected some kind of action from Trump, but I'm not sure if anyone expected it to, I guess, come this quick, right? So I think it's gonna make for an interesting Monday and really week ahead. You think of certain sectors that might get hit hard from this. I saw some news about certain imports like coffee, for example, getting hit interestingly on this. The price of, coffee in general in the markets has kind of been going up, and with the tariff news, I think kind of skyrocketed a little bit last I saw. So it's going to push up the price on, cost of goods sold for a lot of these companies. And, I think we can expect some volatility heading into the week because of the tariff news. So it'll be interesting to see what that looks like. I think I could see, the markets initially opening up kind of weak, but obviously a lot of people are hoping that, um, we can kind of digest this news and, obviously move on from this. I mean, the market as a whole, SPY, is, I think only 6 points off of an all-time high right now. So I personally don't expect some insane, nosedive, I guess, on the price of it. But it is, cause for concern for investors. So I don't know. What do you think on
So
the tariff news, Ethan?
uh, the first thing that I'm thinking of is it seems like Trump and other nation state entities, they're using the tariff game a little wildly. They're swinging their little ding dongs around and they're saying, Trudeau, Justin, which, might I add, I thought that he had stepped down, but maybe maybe I haven't been paying attention, or I don't understand the full nuance of that. But it seems like the tariff action and activity is just going to be a stick that the big boys use, where middle America sort of gets the brunt end of that, where we get hit with increases from the tariffs and whatnot. And we'll see how it plays out. Ultimately, this lets me segue into what you had mentioned before, which was the January Barometer. And so my question would be, do you think that all of this tariff activity and the swing-a-ding-a-lingin is going to just play itself out at a macro level throughout the whole year based on what's happening this month? Well, last month, because it's already February 2nd. What are your
Yeah.
thoughts?
Yeah. Good question. Obviously, none of us know what the future holds, right? We're all just speculating at the end of the day, investors, um, all market participants, really. And just to, I guess, give some context, right? As you mentioned, the January Barometer, basically what that is, it's a market hypothesis stating that returns in January predict those for the rest of the year. So, it's basically saying, generally speaking, what we see happen in January, we can kind of project out for the rest of the year. And based off January, I mean, we had a great January. Like I said, the SPY right now is, the overall market is trading not that far off of an all-time high. We actually touched 610, which was an all-time high. Last week, I think it was on the 23rd. So I mean, we've been on a tear, really. Now, obviously, with the tariff news, a lot of people in the markets weren't anticipating it hitting like this. So, yeah, I think it's going to kind of throws a monkey wrench in there, right? But I don't personally think that it's going to lead to, worst case scenario, right? Which would be a bear market, something similar to what we saw in, 2022 when Russia invaded Ukraine, right? We had a pretty nasty bear market there. But really, ever since the beginning of 2023, we've been on a bull run. And so while I do think the tariff news definitely changes things from an economic standpoint, and I definitely didn't major in economics, right? I'm a philosophy major, so I'm not going to dive into the depths of that. I'm sure there's a lot of people that could, but yeah, I think it dampens the mood on a short-term basis. But on a long-term basis, no, I mean, I expect, I expect this run to continue, really. We're on a trend right now, and when you're in a trend, you're going to have, dips, and then those get bought up and the trend continues. So if anything, I would view this as a dip opportunity. Now, how far does that dip actually go? I don't know. I mean, I'm very bullish in some of my positions right now. So I'm hoping uh, that it's best case scenario, just a Monday, um, kind of freak out session, and then we climb the rest of the week. But who knows? It could continue throughout the week and last a little bit longer. But I don't know how you feel, Ethan, but I feel like the way things are right now, it feels like there's a new piece of news dropping like almost every other day. I mean, just look at January and how crazy that's been. We had the inauguration, we had those horrific plane crashes, we have the tariff news. There's a lot of things for the market to digest, and that's part of the reason why I love the market, is because it's never the same. There's always something new. You have to adapt. You have to be ready. I've always liked the saying, strongly held convictions, or was it strong convictions held weakly? I've always loved that saying because it's true. You have to have a hypothesis, a conviction on what direction you think the market's going to go based off the information you have. But if you're wrong, you have to be able to change. You have to be able to adapt. So
I like that quote. I also like the quote from the late great Michael Wilcox, which is, based Trump is speed running us into a recession.
yeah.
So that could also be what happens, is that listen, guys, it's possible. It's been predicted for the past 12 years that we'll hit a recession.
Yeah.
But the question you might have to ask yourself is, are we already in it? Are we already in it?
I think it's coming for sure. I mean,
but they've been saying that for like four years.
Yeah, that's true. That's true. I mean, you have, I forget the stages. It's covered very nicely in some books of, you have periods of accumulation, acceleration, right? Where the market is in a bullish trend. Then you have periods of, just continuation, right? Where it just kind of goes sideways, and then obviously deceleration, which is a bearish market. And that's all the market is. It's always in one of those stages. You can always bank on that. Right now, I think until we get some more data from the charts, I think we're still in a bull market, but who knows? Who knows how long that's going to last? But when we do switch, what do they say? It's staircase up, elevator down, right? So I think when it does turn, we're going to know it pretty fast. So, which, by the way, there's money to be made there too. So
I think a good segue would be to off script. I'm going off script here, but I think a good segue is to think of the psychology between your hosts, because I think that we are two sides of the same coin, in that I believe more in the chicanery and the manipulation of the stock market, whereas you are much more, believe much more in like the fundamentals, and in analysis, and that there can be a significant analysis found within like technical analysis and whatnot to give you a good idea of a trajectory. Whereas I'm on the side of having lived in the trenches of the subreddits.
Those are important. I think I lost your audio. Can't hear you. But while we're trying to figure that out, just to kind of pick up on what you were saying, I definitely think that when you're dealing with the markets, you obviously have fundamental analysis, you have technical analysis, right? And you kind of need a blend of both to navigate. You don't want to just go in blindly, taking a trade, taking a position. And so, for me, if I'm going long, if I'm buying something, anticipating it going up, it's important to have a catalyst, right? So that catalyst could be a piece of news. It could be an earnings report, anything like that. On a technical side, it's seeing price moving above a key moving average, right? On a daily chart, a 200-day moving average is generally watched by most traders, most investors. It's one of the bigger ones. The nice thing with technical analysis too is a lot of it is kind of self-fulfilling prophecies, right? There's nothing that says clear cut that, hey, if price gets above this level, it will go up. But because so many eyes are on it, and because so many people are anticipating that movement, it becomes a kind of self-fulfilling prophecy. I've seen it happen a lot of times with, certain stocks where they get close to a certain moving average that everyone has eyes on. And, the next day it, kind of gaps up above that on a ton of volume. And that volume is there because everybody is kind of watching the same thing. So, I think technical analysis, fundamental analysis, you need to have a blend of both for sure. People who are more long-term traders, borderline, investors, or what we would call position traders, which would be somebody who's holding a stock for, months on end. They're going to rely more on fundamental analysis, right? They're going to rely on earnings reports, things like that, to make their decisions. Whereas, someone like me, I'm more of a short-term trader, right? So the average length of time that I hold something is a day, maybe 2 days, 3 days. I do a lot of short-term stuff too, where I'm in the market at 9:35 a.m. and I'm out at 10 a.m. So for someone like me, I like that fundamental piece, that breaking news, this, something the market wasn't anticipating, a new product, something like that. But in addition to that, I want to see some technical analysis lining up, right? I want to see volume. I want to see moving averages crossing over, price moving above certain moving averages. And I think at some point, Ethan and I will do a kind of breakdown, I guess, of some of the more widely used or watched technical analysis tools. Relative strength index is a big one, commonly referred to as RSI. There's something called the MACD. There's a lot of different things there, but above all else, the most important things that you can watch, I truly believe, are price and volume, right? That's going to tell the whole story at the end of the day of where a stock is going. Pretty much all indicators are lagging, meaning they're showing you data from the past in a sense. But you can see price in real time. You can see buy orders, sell orders coming in real time on the time and sales, and you can see volume coming in real time. So those are important. So, one thing that, we wanted to cover today, something I kind of touched on last week, the Magnificent Seven. Maybe you have heard of this, maybe you haven't, but it's a term that is commonly referenced in the news, right? CNBC, stuff like that. The Magnificent Seven is, it's basically referencing some of the larger companies that we see in the market. The Magnificent Seven stocks are basically a group of high-performing, influential companies in the U.S. stock market. So it's going to be Alphabet, Google, Amazon, Apple, Meta Platforms, Microsoft, Nvidia, and Tesla. Those are what we call the Magnificent Seven, and it's a grouping of stocks that basically a lot of people in the market pay attention to. It's basically one of the ways that people look at the market and get a good idea of, hey, how are we holding up? Because if the Magnificent Seven are doing bad, typically the whole market's doing bad. So, that's the Magnificent Seven, and really the returns on that grouping of stocks over the past 5 years is truly insane. Over the past 5 years, Google up 241%, Amazon 104, Apple 331, Meta Platforms 170, Microsoft's up 236% over the past 5 years. Nvidia's probably the craziest one, up 3,130%, and then Tesla 1,240. So those are your Magnificent Seven. And with the tariff news, obviously a lot of tech heavy, AI heavy companies in that grouping, right? So how are they going to be impacted by this? So Ethan, do we have you back?
I'm
How's
back.
your audio looking?
Can you
Nice.
hear me? Okay, cool.
I can. It's a little soft, but I hear you. Yeah.
Had to toss on the emergency backup headphone here. This was from
Nice.
my days working in insurance, so I'm back.
Well,
I'm
we're
back,
grateful
everybody.
for that. We're back.
Well, look, here's your GME update,
Let's hear
your
it.
weekend update. GameStop is being manipulated. The
Mm.
data exposes the crime. These are your headlines from the subreddit. There's irrefutable proof that hedge funds, market makers, and institutions are committing one of the biggest financial crimes in history. They are illegally shorting GameStop. Remember, GameStop exposed a lot. Whether or not you agree with the hypothesis that a short squeeze will happen again, ultimately, prior to the short squeeze that happened in January, 4 or 5 years ago, there was no acknowledgement of a short. Many talking heads said that shorting, or no. I think I might be incorrect on that because shorting is not something that's not acknowledged. I'm mixing things up. I redact what I just said. But they're illegally shorting it, using dark pools to suppress price and rolling over their failure to deliver to avoid closing their positions. There's SEC failure to deliver data that confirms that naked shorting is still ongoing years and years later. They're not closing their positions. Instead, they illegally roll them over. This is a naked shorting in violation of SEC Reg Show, SHO. There's a SEC reported failure to deliver data that came out that showed that dark pools are also suppressing retail buyers, where 50 to 80% of GameStop trades are happening in dark pools. For those of you who do not know what a dark pool is, it is a financial tool or instrument that larger entities will use in order to place a purchase of a security without really disrupting the market. So if a very large institution wants to have a position and they don't necessarily want to affect the market, they will use a dark pool. I'm not aware of the the reasons for why the dark pools existed in the first place or were introduced in the first place, but I can assume that they were put there for good reason. They're probably put there for some sort of regulatory reason. Maybe I could envision if some company went bankrupt and another company purchased it, maybe if they were transferring those shares from one entity to another, they didn't want to actually have that affect maybe the market price or whatever. But it's being used illegally. And so that's the news for GameStop. Additionally, negative shares available to borrow. Shorty has to locate and return Ryan Cohen shares. So supposedly, The news that we updated you about where Ryan Cohen was transferring his shares from RC Ventures LLC to himself, supposedly those shares have to be recalled. So, if these shares were bought to lend out and are all now recalled, the shares available to borrow will suddenly disappear and brokers will have negative shares available to borrow, meaning that short sellers must buy and return the shares. If RC Ventures lent out its shares and those shares are now transferred to RC, they are automatically recalled and Ryan Cohen doesn't have to do anything. Nobody can accuse him of wrongdoing, as it's a normal business for individuals to transfer assets between themselves and the companies / trusts they own. So this is not something that has happened. This is something that those of the Super Stunk subreddit are predicting might happen. Maybe that's why he transferred it, so he could use a 4D chess maneuver in order to force market makers into recalling or actually purchasing shares on the lit market, not using those dark pools. So they would have to purchase it on the lit market. They wouldn't be able to use some type of rehypothecated share or anything like that. They would have to actually purchase real shares, which would inevitably bump up the price significantly. Additionally, SEC lawyers were told they must seek permission from politically appointed leadership recently before formally launching any probes. So in the second, lawyers at the SEC have been told they need to seek permission from the politically appointed leadership before formally launching probes. Two sources were briefed on the matter. The change, which has not been previously reported, was made under new leadership at the SEC since Trump took office. Typically, 5 commissioners oversee the independency agency. Currently, the commission has 3 members, 2 Republicans and 1 Democrat. In recent days, some enforcement staff has been told that they'll need to seek the commission's approval for all formal orders of investigation. So what's happening with that is the SEC being politically overtaken for some sort of ill maneuvering of funds or looking the other way. I'm not so sure. It could just be, what do they call that? A dog whistle for something. I'm not sure. But the SEC, they've shown themselves to be of minor import in the years past due to their kind of lack of ability to perform. But that's your GameStop updates for the weekend. Seems like, as always, there's chicanery afoot. There's things happening. Who knows what's happening? We've got our tinfoil hats on. We're waiting for the mother of all short squeezes or squeezes.
Man,
yeah.
That has been by far the most interesting story in the market over the past 5 years, hands down.
GameStop has been something else, yeah. That does
they've
remind
made
me,
movies about it.
I do want to share here our crypto chart for the week.
Yeah, I didn't pay attention this weekend much to the main crypto markets. I was primarily focused on some of the lesser known meme coins such as Fart Coin, just your everyday investing tool. But please give us a rundown of the respectable cryptos.
Once again, since Friday, we've had a nice decline, and we're seeing declines left and right. I don't know what it is. Great. Is it the weekend slump? Are all the Bitcoin miners just taking a break? I'm not quite sure, but it's not looking good for crypto. Or maybe it's just going to be another week of bumping back up to that trend line. We'll see.
Yeah, it's well, I mean, right now we're shooting this episode kind of early for us on a Sunday, so the futures markets aren't open yet. They'll be open in about another hour. But as you were sharing that, I was thinking about how, that basically is, in a sense, kind of give us an indication, I would imagine, of what the futures are going to open up like. Unfortunately, if crypto's down, as we've talked about before, it was meant to be a hedge against the market, but I mean, crypto basically just runs in tandem with it. So if crypto is down, futures are probably going to open down. And unless we get some significant news heading into Monday, I would imagine the markets overall are going to be down. But I hope I am wrong, because my Best Buy position will not like that.
There we go. I
Um,
like it.
what else we got? I feel like a good transition from that would be kind of the economic calendar for the week. What do you think?
Yeah, I think that'd be good. Let's check out the calendar. What's going on this week?
Yeah, so we have um, not a ton happening this week, although the things that are happening are going to be pretty key. So on Monday, it looks like we have the Atlanta Fed President Bostic speaking at 12 p.m. Just as an aside, there is a website that tracks, I'm forgetting the name of it, but there's a website that tracks when the different, Fed people speak and which ones move the market more than others. So that would be kind of interesting to check out. But anyways, yeah, we got that on Monday. We got construction spending at 10 a.m. before that. On Tuesday, you're going to have Atlanta Fed President Bostic again speaks on housing. Fed President Daly speaks at 2 p.m. I feel like markets move when we get that one, so keep an eye on that. Wednesday, we have ADP employment at 8:15 a.m. And then you got some more Fed people talking 3 p.m., 1 p.m., and 3 p.m. But Thursday is the big one. So Thursday at 8:30, we get initial jobless claims. We're projecting 213,000. So be really interesting to see where that comes in. I feel like the markets are going to be really sensitive to that. So definitely something to keep an eye on. And then more Fed talk at 2:30. And then on Friday, another doozy. We get the U.S. employment report. So that's going to be important. U.S. unemployment rate, all that info, all that data comes in fresh at 8:30 a.m. An hour before the bell goes ding-a-ding-ding. So definitely something to keep an eye on. Consumer sentiment at 10 a.m. So not a ton, but enough that, you definitely want to keep an eye on it, especially with the jobs report.
Yeah, enough to show you that those Fed folk, they sure do like talking.
Oh, they love to talk. They love to talk. So yeah, they don't move the market as much as Daddy Powell, but they still have an impact. They still have an impact for sure. So,
I have I think I've got a fax coming in right now from our senior correspondents in the field, Michael Wilcox.
Michael.
Michael Wilcox out in Twin Cities. He's letting me know he's got an easy buy. This is an easy buy, supposedly. Apparently, Cover is what they're called. I don't know who they are, but he found this comment on 4chan. So you got to really take this with a grain of salt. But he found this comment on 4chan, and he said, Cover. He sent a link to Yahoo Finance for Cover. They released some trading card things with VTubers on them. And they brought in so much money that they overshot their EPS by 30%. They were a massive hit.
Wow.
They were another batch, and the report encompassing them is coming up soon. Probably going to jump them again. Their PE is pretty good. Their financials are straight. And they're expanding with even more stuff, like an energy drink they just released, which should be in the report after next. Way undervalued right now. That's Cover. I have to agree. The VTuber. If you don't know what that is a virtual YouTuber. Sometimes it's a real person. Sometimes it's an AI person that's talking. But Cover, or the Cover Corporation, if they've got their hands on VTuber stuff, that's something to really check out. So that's
interesting.
our the VTuber paradise or community paradise. I outed
Paradise.
myself. I outed myself.
We know where you fall.
A massive VTuber watcher. if you've ever seen any comments from their community or the absolute um, enthusiasm with which they will pour themselves into the VTube universe, you know
Hmm.
that those people, 20% of them probably being furries, are going to invest a lot of money into it. So let's take advantage of the furries and get some buy options going here. And
Time to get some calls.
time to get some calls here. I'm looking now. They're currently trading at $22,789,000 per share. So it's not going to be something. It's not going to be something you're going to be able to just plop plop a couple shares down. They
Hmm.
within the
Yeah, I for
past
one will not be
they're up
buying shares on that.
they're up 42.8% since the last 6 months.
Wow.
Year to date, they're up 6% already this year. So they put out their little trading card game, spiked up to 42.8%. The members of their board, thank you, Mr. Wilcox, for this recommendation.
He's doing some excellent work out there.
Excellent field work. As a reminder, everything that we say is just parody. We're not actually giving you any type of financial advice. Any financial advice that you take, you're going to need to take on your own. Nothing should be taken seriously by us because we will not be held responsible for your foolish and degenerate actions.
That is very true. Very true. Strictly entertainment, folks. Don't
Strictly
forget it.
entertainment. Okay, well, that's all I've got. Do you have anything else here?
Um, I think that's about it. Just one last note here. Um, as far as earnings, for the week, we got some big boys coming in: Palantir, AMD, Disney, Ford, and the big one at the end of the week, Amazon.
Yeah.
So, coming back to that talk of Magnificent Seven, that's one of them. So keep an eye out for that. Thursday after the bell is when we'll get Amazon earnings. So, might be worthwhile to keep an eye on that if you want to, take your chance in the great stock market casino calls puts. But definitely take a look at the chart first. But yeah, we got earnings for that on Thursday. So that's all I got.
Cool. Well, hey, I'll have to say, based on all of that, Ford, they usually have some pretty cheap calls, and I've had an excellent time with that. But look, thank you everybody for joining us. I'd like to express my gratitude to everyone who listens and checks out our YouTube channel, our Twitch, and our shorts, as well as podcasts on Apple Podcasts. Make sure that you like and subscribe to whatever that platform that you're using allows you to do. But thank you, everybody. Hope you have a wonderful, wonderful week coming up, and we'll catch you again on Thursday. We'll see what happened. See what kind of losses we had. See what kind of highs that we had. How much money did we make? And at the end of the day, oh my gosh, Sugar Booga Mama, thank you so much. Woohoo. Another great one, guys. Can't wait for Thursday's roll call. Thursday's roll call is
Amazing.
going to be great. Yeah. So thank you, everybody. Have a wonderful week. This has been Ethan and Brandon.